The association noted that carriers operating in Nigeria are facing persistent challenges, including jet fuel price volatility and difficulties repatriating funds, which have forced some airlines to scale back capacity. The projected decline extends a downward trend that began in Q3, signaling ongoing strain in West Africa's largest aviation market. However, IATA added that long-term recovery remains possible if market conditions improve and regulatory bottlenecks, if they ease, going forward. All right, then to other African countries. Now we see China, Zambia, and Tanzania signed a landmark $1.4 billion agreement to revive the Tanzania-Zambia Railway Authority. That's the railway line, Tazara. The 1,860-kilometer stretch between Tanzania and Zambia was built by China in the 1970s to facilitate copper exports and fuel imports through Tanzania. The agreement was signed in Zambia's capital, Lusaka, during a visit by Chinese Premier Li Qiang, who, along with Zambian President Hakainde Hichilema and Tanzanian Vice President Emmanuel Nchimbi, they witnessed a groundbreaking ceremony for Tazara's revitalization. Li said Tazara is a demonstration of China's commitment to promoting infrastructure modernization with the two countries, adding that Tazara is a signature project ushering in a new era of development and prosperity for Tanzania, Zambia, and China. And let's look at West Africa now. We see Ghana's economy grew at a rate of 5.1% in August 2025, according to the Provisional Monthly Indicator of Economic Growth released by the Ghana Statistical Service. This represents a marginal increase over the 4.9% posted in August 2024. According to the GSS, the August 2025 growth was driven by the services sector, which expanded by 9.5%, up from 2.6% in August 2024. ICT and education drove the continuous growth of the services sector, and we see the services sector that contributed about 80% to the 5.1%. It was followed by the agricultural sector, which grew by 7.4% in August 2025, compared with 2.3% in August 2024. And talking about other economies now, we see the South African Reserve Bank, SCRB's Monetary Policy Committee, they've cut the country's repo rate by 25 basis points, reducing the repo rate from 7% to 6.75% per annum. SA Reserve Bank Governor Alaseja Kiago made the announcement in Pretoria, South Africa.
Growth is looking steadier than last year. The outcome of the second quarter surprised on the upside, and the third quarter indicators are looking broadly positive. Our 2025 growth forecast has therefore been revised slightly higher to 1.3%. We continue to see growth nearing 2% over the forecast horizon. Employment has also been rising. Household spending has been relatively strong to date, supported by wealth effects, further withdrawals from two-pot pension savings, and lower inflation and interest rates. The MPC decided to reduce the policy rate by 25 basis points to 6.75% with effect from the 20th of November. The decision was unanimous. Members agreed there was scope now to make the policy stance less restrictive in the context of an improved inflation outlook.
And it's right here in Africa. We'll have Nigeria's that's for Tuesday next week. The meeting starts Monday next week, and we'll get the latest interest rate decision. That's for Nigeria. We'll definitely be covering that live right here on Channels Television. All right, let's get to our next conversation now. We're diving into a topic that affects every single one of us, artificial intelligence. AI is now woven into our daily lives, in our phones, our cars, our workplaces, even in the apps and services we use, without thinking. Millions of people rely on AI every day, yet most don't really understand how it works or why they should trust it. So much buzz about, the future of AI spending. Now with talks of an AI bubble, loading, but NVIDIA's recent earnings couldn't help with that. But let's discuss more now with Mathilda Oladimeji. She's a research and doctoral student in information systems, joining me via Zoom. Great to have you in the show.
Thank you for having me. Super happy to be here.
Fantastic. So, let's start with the basics now. Most of us, we use AI every day without even, noticing. Why is it a problem if we don't really understand, how it works, at this point, as long as it does the job, I guess?
Yeah, and you're right. You are constantly using AI. So like your Face ID, even the autocorrect that just changed your text message. And for those small things, not understanding it might actually seem fine. But we're starting to see that AI is, making the big decisions, So whether you qualify for a loan or whether you got called for a job interview, through resume reviews. And so when those decisions go wrong and you can't ask questions or you are rejected, then it becomes a problem because you don't even know what happened. You can't fix it, you can't appeal it. So, and that's where the problem starts.
So, we see companies are spending billions on AI. We just got the earnings from NVIDIA recently. Why can't they just explain it better? What's stopping these big companies from breaking it down to us?
Yeah, so tech companies, I think that they actually got excited about building powerful AI. So they built these incredible complex systems and they eventually forgot that they had to sell it to everyday people using it. And true, part of it is technical, like AWS, NVIDIA, they actually build these complex systems that has to be explained to other engineers, but also they haven't invested in explaining it to everyday people. So just like in marketing, when you are managing marketing campaigns, if you don't communicate the service, then people would not understand and people would not trust it. So I think that they forgot the basics of communication, and that's where they need to start learning the lesson.
Right, and there's also talk about people blindly trusting artificial intelligence. Why do you think that's happening, and why aren't we asking more questions, in your opinion?
So there are a few reasons, and they are all concerning. So the first one is that we are excited and overwhelmed. Everybody's using AI. AI is everywhere. It moves so fast. Maybe Netflix suggests a show, or your phone suggests a map route, and you just watch it. You want to send an email, you quickly use GPT. It's easier to just go along. And secondly, we have been conditioned to think that we can't understand it. I'm not a tech person. I don't understand it. It's too technical. So I'm just going to stop asking questions. I'm just going to, go along with it. And then the third one is that we are confusing capability with reliability. True, AI has done some incredible things, even answered some text questions and passed some exams at the top schools. But the fact that it's doing these incredible things does not mean that it exactly know what it's doing. That's blind trust. So people, because they feel that AI is able to give them this output or this content, then they believe that, AI definitely knows what they're doing. And that's blind trust. That's what the companies are actually counting on, that you trust it, instead of doing the hard work of actually earning that trust through transparency or explanations.
So what should we regular people, what should we be doing at this time? Should we be demanding explanations when AI makes a decision?
Yes, and it starts like a simple thing. So when you are like using the conversational AI agents such as ChatGPT, ask why, ask how, query it, ask how it came to that conclusion. And I think that the more people do it, the more empowered the humans get, because you don't need to understand the technical details. You just need to understand the reasoning behind it. Like, how did you get to that content is giving you? How did you get to that output? And the more people demand explanations, the more companies are pressured to build AI agents that are more clear and transparent in how they actually got to that output or content they are giving to you. And the more demand there is, and the more AI will definitely get better.
And, should we be worried, about, AI, not understanding, what's behind AI at this point? Is it dangerous if we don't understand it?
I don't think that we should panic, but yes, we should be concerned. So AI is not dangerous, it's a tool, and it's not going to take your job or take over the world. I know there's like a lot of things about that. But I think that if we don't understand how it works, we can't catch it when it goes wrong. And sometimes it does go wrong. That's why we see AI, people saying that AI hallucinates, AI is giving the wrong output. It just keeps on saying the wrong things. So the danger is not that it's this evil thing, it's just that we are now starting to let it make important decisions about our lives without the accountability. And if a human makes a bad decision or a person does that, then we ask them to justify it, but nobody has been able to ask AI to justify the reason in that way. So that's why I think it's concerning. And even though it's not going to be a risky thing, we just need to make sure that we're not giving it power without requiring transparency.
Oh, so where is all of this heading? Will artificial intelligence get easier to understand, or are we just going to, trust it blindly?
I think that the more exposure we get to a certain tool, the more you definitely understand it. So the more you use a particular thing, whether that's driving or using your mobile phones, the more you use it, the more you tend to understand it. So definitely we're going to see AI more. It's going to be more embedded in our lives. I believe that AI is here to stay, but we need to keep asking questions. We need to make sure that companies are explaining what their AI tools does, what's the logic behind it, what's the reasoning. And so once we start to demand those transparency and explanations, then they realize that building this AI tools, this kind of AI tools might actually be a competitive advantage. And I think that that's where the path I see developing.
Right. So before I let you go, do you think there's a possibility AI could make us smarter?
Yes, I think so. However, it's a two-pronged answer, because I believe that if you're an expert and you're using AI, you definitely use it better compared to someone who is a beginner, right? So you are going to use the same tool, but the process or the approach which you use the tool is going to be different. So take, for example, a software developer who is an expert, and then we have a beginner software developer. And they're trying to prompt an AI agent to create a code on their website. The expert definitely is going to see that, there's something wrong with this code as compared to a beginner. So that's where the differences are. If you already have, we call it domain knowledge. If you have domain knowledge in that area, then definitely AI is going to make you smarter. And even for the beginner, it's going to make you smarter, but you still have to do the groundwork.
Fantastic. Let's not get dumb with AI at this point. Thank you so much.
Yeah.
It was great having you. Mathilda Oladimeji, researcher, doctoral student, information systems. Great to have you on the show.
Thank you so much.
All right, let's get a check on what's playing out with the markets now. Let's see what smart money is doing at this point. But we see it's still a lot of pressure. For the NGX, it's been, if this ends down today, that's 5 days of losses for the NGX. And just following the pressure we've seen in global markets this week, and we see the Johannesburg Stock Exchange also losing ground, 2.34% down already at this point, losing the 110,000 level. Let's look at other parts of Africa now. We see the North Africa, the EGX 30, that's 0.51% down. So we're seeing sell-offs also there, but this managed, the Nairobi Stock Exchange managed to close in the green yesterday by about 5 basis points. Let's take it on to the Middle Eastern markets now. It's also red. Red is also the color there. In the UAE, a big 1% drops there for the Dubai index, Abu Dhabi index. At this point, I'm wondering which market is going to make it, this week. Let's look at other parts. The Tadawul, that's closing the green yesterday, 0.11%, and the Qatari index, 1.33%, a big drop right there. Let's get a check on stock futures now. See for the stock futures, they edge higher. That was Thursday night after major averages tumbled on dramatic sell-off there, the artificial intelligence stock. So we see 0.34% down, 45,981 points there for the Dow Jones Industrial Average futures, and just a mild 4 basis points rise for the S&P. Tech-heavy NASDAQ, that's at 0.20%. The tech sell-off there still holding that one down at 24,083 points. Let's get a check now on Asia markets. We see Asia markets, the bloodbath also extends there. The Nikkei closed big, 2.40% drop. Kospi, 3.79%. So it's all red, at this point. But let's get a summary of yesterday's close from our correspondent, Mary Bird.
after a much unexpected reversal on the day, as many investors were watching to see how the Dow Jones and the S&P and the Nasdaq would respond. As the Dow Jones closed down at 0.8%, the S&P 500 also closed down at 1.5%, and the heavy tech Nasdaq led the day down at 2.1%. After what was expected to be a slow September jobs report that was released just on Thursday, it had a little bit more growth in the job market than expected. And after the closing of the bell at 4 p.m., the company NVIDIA had a blockbuster earnings day. We shall see what Friday brings with the U.S. stock market.
Right, definitely. The NVIDIA, that NVIDIA hope, that fizzled away fast, but maybe we might get a green close in the U.S. Today. Thanks so much for that. That was Maria there. But let's take it on to Europe now. For the markets, let's bring in Lars Holter in Berlin. Great to have you, Lars. So I don't know if the bloodbath is also in Europe for these markets.
Well, I wouldn't. Yeah, Ladi, hi, good to be with you. I would not call it a bloodbath here indeed, but markets are down, and they're down all across Europe. No surprise there, of course, as they are down pretty much everywhere, as we just have seen, including even crypto. Now, what's interesting, Ladi, in Europe specifically with regards to the DAX in Frankfurt, we've seen such a long period of sideways trading that these recent losses now over the last couple of days have indeed pushed us all the way down to more than 6 months low. And looking further behind the scenes here in Germany, we got some bad economic data again. Purchase manager index worse than expected, and a sign certainly that the economy just remains stubbornly weak. And also weak defense stocks again, kind of cynical almost here what's happening, because we're looking at that so-called peace plan the US and Russia have come up with for Ukraine, aside from the fact, of course, that pretty much everyone outside Russia and Washington finds that plan unacceptable. The mere notion of that conflict possibly ending might be a good sign for world peace, but it is bad for defense companies, of course, Ladi, because they have seen quite a run-up based on the war here, so those shares are down.
Yeah, I guess it's a red Friday, at this point. But, moving to other matters now, this weekend, the G20 summit is about to start in Johannesburg. And, right in time, Oxfam has a new report out on the widening gap between, the rich and the poor. And the numbers are even more alarming, than expected. I know you've looked into this report. What can you tell us?
Yeah, sadly, Ladi, that global inequality is on the rise, as we have obviously seen for a long time, and that's despite all the sorts of efforts to change that. Now, here's some numbers. As the world's billionaires have seen their wealth rise from $13.5 to $15.5 trillion in 2024, and those are the latest numbers. That is up 16%, and Ladi, that of course means that billionaires are seeing their wealth go up much faster than pretty much anyone in the world sees their savings grow. Oxfam says that just the gains alone that the billionaires made in 2024 would be enough to lift 3.8 billion people out of poverty worldwide. Now, as to where this incredible wealth is located, we can start obviously with the United States, where there's more billionaires than anywhere in the world, and where we can also see how recent policy is actually helping widening this gap instead of closing it. Just look at U.S. President Trump's much touted main achievement in his first year as president, the so-called Big Beautiful Bill that has been extending tax cuts that economists have said would overwhelmingly help support the super rich. However, half a world away, it's not much different. China and India have the next highest numbers of billionaires, and Germany is in fact in fourth place. According to Oxfam, 130 people in Germany sit on 10-digit wealth. As for the EU, that's a whole 27-member nation bloc. That's almost 500 billionaires there.
Right. I guess at this point, the rich find a way of getting richer. What can be done against this major inequality? Are there, any serious efforts on the way?
Yeah, not as far as I can see, Ladi. There is a lot of talk around that, of course, and has been for years in the EU, to say on my home turf here. The latest idea was for an EU-wide higher taxation of the super rich. EU-wide, mostly because experts agree that this is a problem that can obviously not be solved by one particular country, especially considering how easy it would be for billionaires to just move themselves or at least move their money to another country, to another tax system. Oxfam is now also using this latest report and its timing, just as this G20 summit is about to start in South Africa, to appeal to the industrialized nations to establish an international task force to combat wealth inequality. Oxfam says such a group should have a similar structure and standing as the Intergovernmental Panel on Climate Change. However, such panels are usually known to merely give advice to governments and to make pleas for policy changes. So we would still not necessarily see anything change, really.
Right. All right. We'll keep tracking that. Thanks so much, Lars Holter, and have a great weekend.
You too, Ladi. Thank you.
All right, talking about a great weekend. Not looking good for the crypto traders at this point. If we look at the market there, the crypto market is under a lot of pressure. If we look at the crypto-related stocks that's trading on exchanges in the U.S., yesterday's close, we see big drops there for MicroStrategy, 5% drop. Marathon Digital, $10.24, big 7.75% drop. These are stocks related to the cryptocurrency market, either in mining or also have maybe some plays in the crypto market. So that's the color there. Then we see Bitcoin there, big 9.19% drop. It's a bloodbath at this point. Sell-offs across board with the altcoins down double digits. We're seeing most of those riskier cryptocurrencies like the meme coins. Those are down big today. Let's look at some of the headlines there. And it's extreme fear, by the way, talking about the fear greed index. Let's look at some stories now. We see ARK Invest. Yeah, they have it. Extreme fear, 11 points over 100. This is a big low there, showing that traders are really, really afraid right now. Then we see ARK Invest. Institutional investors, I guess at this point, they're accumulating with the sell-offs. They've expanded, ARK Invest expanded its exposure to digital assets, purchasing about $40 million worth of crypto-related equities in a renewed push, into the sector, even though we're seeing retail selling off at this point. Now we see Peter Brandt predicted Bitcoin could hit $200,000. Well, he's saying that'll be by 2029. He's revised his previous prediction there. That was supposed to happen earlier than that. But I guess with what we're seeing so far, he's saying that will be in 2029. But definitely, we'll keep tracking to see how the markets, maybe some kind of recovery, next week. We'll see what the catalyst could be. But for now, try and stay safe out there. I'm Ladi Williams from here, the team right here at Channels HQ. It's bye for now.